Hey everybody, it is Wes with Pikes Peak Trades, and here to give you my market update for trading that ended the week of August 26, 2022. And what a huge week it was. We saw a Monday gap down, we saw a midweek rally, and then we saw an 8-minute speech by Fed Chairman Powell that tanked the market 3 to 5%, depending on where you were looking across the indices. And so with that really negative reaction, we undercut weekly lows, and we're left to kind of decipher here. Do we actually have a significant bear market rally top, and are we going to fresh yearly lows? Or did bears push things too far too fast, kind of like a overstretched rubber band? And are there some technicals that are going to indicate that we could have a surprising, and I would say based on sentiment indicators and also just scrolling through my FinTwit feed, it would be a very unpopular rally. So I'm going to try to show you a balance of evidence, as I always do. We're never blindly biased one way or another here at PPT. We take things one day, 1 week, 1 month at a time. So there's a lot of evidence that I want to start with. And I want to begin with the VIX and the NYMO. So if you followed me for a while, you know that I like to look at Bollinger Bands with respect to these technical readings. And you're going to see right here, we closed Friday with the VIX above the upper Bollinger Band. Now, there is a progression of steps that I like to follow to see if we did sell too far too fast. And we got step one. Step two would require that Monday is green on the major indices to get that VIX back inside that upper BB, and then we would confirm that, which I'm going to show you what I think would be a minor 4 bottom if then Tuesday followed through even lower. Now, just because we got 1 day outside the upper BB doesn't mean we won't get another. During the bear market, you're going to see, especially right here, in kind of that kickoff leading leg down in mid to late January, we had multiple consecutive days right in here of VIX closes above the upper BB. What I want to point out, though, slightly different than that is if you look through this progression, although the text here is covering it up, the NYMO was continually dropping all the way through, but we actually got a divergent close on NYMO on Friday, about 10 to 15 points higher than the Monday opening low, which was also outside of the BB that resulted in that midweek snapback rally. I look at that as positive divergence. So you couple a Bollinger Band close on the VIX above with positive divergence on the NYMO. And I'm going to show you we also got an interesting variety of lower Bollinger Band closes on major indices or ETFs and individual stocks. And I think we actually have some technicals that could set up for a very, very surprising market rally from here. But at the same time, we do have some damage. And so when I get into some high time frame charts, we've got to look at a balance of evidence. I also like using NYAD. And so I think it's always good just to check where that's at. And I wanted to show you that we also have that very same positive divergence here on NYAD. So this tells me that although we had some pretty nasty selling on Friday, there's no way to deny that, it wasn't quite as broad-based and as significant in declining issues as you might think. And I kind of like that divergent setup. So full disclosure, I bought that close. I didn't go heavy, but I thought there is a chance that we could get an early week rally off of some of these divergences. So let's get into now just a wide-ranging set of charts. And we've been looking at this SPX quarterly all summer. Ever since the end of June, we printed it below the 8 quarterly EMA. Now, even with this nasty end of the week here, we're still above it on the quarter, only about 30 points. But it's pretty crucial also how we finish the month of August. So we get into that monthly candle, and you're going to see that is not a good looking candle. So this has that shooting star look. And we have 3 trading days left in August, starting with Monday the 29th. And we need to see that move back up closer towards the middle of that wick and back into these lost monthly MAs. If that can happen, we've got a chance for September to then rally above and confirm that we could seal that quarterly candle above the EMA. Get into the SPX weekly. You're going to see a nasty week. We lost here some MA support. We did find a 0.5 to 0.382 fib, and that needs to hold. We do not want to see price trade into the high of this wave 1 at about 39.45. If that happens, I'm going to be very, very cautious and weight the probability for that next leg down that you see in red. We'll continue marching through here. On the daily, we did not get an SPX lower BB close. So if we need more market-wide confluence, it's still possible we could close Monday below that lower BB, still above the 50-day SMA, still above the 0.5 fib, still above the minor 1 high, and that keeps the bull trend intact. We get into the small time frames here, and you're going to see just that nasty waterfall sell. Now, this is typical of a leg C sell. In Elliott wave, leg C's of pullbacks, they feel like an impulsive wave 3. But it is also possible that we're dealing with something more bearish. And there's a variety of ways to count that. This could count as a 1, 2, 3, 4, 5, all the way down. Which if we do see a bounce at some point early to mid-week, it would probably reject somewhere in around 41.50. And that would be what you see here in red. And that would obviously be part of a fresh impulse down in those red counts on the higher time frames. It is also possible that this is only leg 1, that this is leg 2, because you see it did terminate in a potentially bearish fib zone, and this is just leg 1 with a shallow bounce. So if the bounces are overlapping and corrective up, then we've got some worries that possibly we are looking at a bear market rally top. But we just have to wait and see. So the close of the monthly candles, how this week finishes, and then the end of September, absolutely crucial for looking longer term. Okay, let's get into the Qs here. Actually, I'll go ahead and show you SPY in case you're counting those numbers a little more directly there. And then into that short-term count, you're going to see below some pivots right into that potential range. And we closed with massive volume to end the day. And there's no immediate setup here other than playing for an oversold opening gap up into Monday, which I was willing to put a little bit of weekly profits to work there. Let's get into QQQ. So we get into the monthly, very, very similar monthly candle. And I want to show you what if we are actually bearish, that we would see 300 lost in a hurry. And I've seen a lot of market analogs to 2008 and 9. I don't actually think that's the analog. If we're going bearish here, I think the analog is much more like the .com crash, because there is a risk by Wednesday that the weekly 8 QQQ closes under the weekly 21. And that happened, if we look back in here, that happened right in early 2001, before just the rest of the terrible plunge that really lasted another 2 years. That was of a super cycle level. That's going to be my super bear count there. And that's what all the perma bears, that's what all the end of the financial system as we know it cries are coming from. I will be a little bit concerned if we lose 300, which is that last monthly MA support by the end of the month, and we get that bear cross. We're going to have to see a significant rebound in September, or we risk losing also that quarterly EMA. And if all of that happens through September, I think we're going to have to say we're looking for something much more nasty here in red. Into the weekly cues. We have a Bollinger Band middle touch. This is the weekly. And we have a 0.5 fib. If we lose this minor one high at about 297, 296 would lose it, then I'm going to have to say I can't weight any probability in favor of this bounce. But if we turn things around right here into the end of the month through the week, and we're able at some point early to mid-September print that fifth wave up, it is really hard to argue against that 5-wave up count. So we're really at an absolutely critical level. I would say that this is probably the most critical inflection point of the summer, because we're so close to invalidation of the most bullish counts. We're really, really close to historical confirmation of things that could be a sign of worse selling to come. And so get your seatbelts fastened tightly. I think we're in for a really, really exciting next few weeks through the end of September. And certainly by the end of September, I think we'll know where we're going over the intermediate to long term. Also, by the way, this is the last weekend of free content at PPT. Things do move into our new premium service. So if you like what you've seen, and you want comprehensive market analysis into what's going to be, I think, a very exciting end of the year, then please come join us. Let's keep working through charts. So we're looking at now daily charts, and we can see here's your lower Bollinger Band close on the Qs. And I'm going to show you a bunch of individual names that have also done that. This in itself, again, like the VIX I showed you, isn't a guarantee that we're oversold into a bounce, because it happened before in the most serious selling legs early on, as I said in January. And it happened again a number of times in May as we were trying to bottom and bounce. But the point is, if bulls are going to turn it around, I think they got that rubber band stretched too far from the bear side. This is the best chance for them to turn it around and seal that white count as you see it. So into the short term, just like SPX, there was no immediate buy other than saying we went too far too fast. We've got a diagonal support. We've got fib support. And if we can see 5-wave impulse up, that next pullback is the one that you want to buy. And I'm going to suggest the individual names that might have already been best setting up for that. Let's now look at small caps. So we want to look here at IWM into the monthly. You're going to see a very similar shooting star candle. We've got to get that price back into the low 190s, into those MAs. That's going to be 3 days of that chance. By the end of August, you're going to see a touch. If you looked at my Wednesday post, I said if we go lower, we've got the 0.382 and a clustering of weekly MAs right where we close the week. This is where small cap bulls need to turn it around to get us that 5th wave up. Onto the daily, right on that 34-day EMA. It's not close to the Bollinger Band, but this is where we would want to see that turnaround moving up. Otherwise, we've got the possibility this is a 1, 2, 3 down. So if we just smash all the way through weekly support at 187 early in the week, and it just keeps diving through fibs, we're definitely going to be concerned. We've got an ABC down for this last leg in red. On the short term, you're going to see right there that 0.382 fib, and no immediate buy. It would have to look like what I just showed you. We'd have to get a little bit of a gapping move and then a higher low opportunity if you wanted to get long small caps. Okay, we get into ARK-K. And we had that count change update over about the last 10 days, and it went right to the 0.618. This is going to need to make a V bottom because we need to see a 1, 2, and then an up in 3 out of this from growth. And you're going to see that candle This is interesting. Friday did not make a weekly low for ARK-K. That's surprising here. You could say positive divergence. It's right there on the daily because the weekly close was lower, but not the weekly wick. Or you could say this just means that bears aren't done and we need another move down. So I've left that nested 1-2 up there until we actually break the weekly wicking low on Tuesday from this week. It'll be very, very interesting to see what happens with growth stocks. Okay, the last main indice or ETF I want to show you is financials. They had a nasty bearish engulfing day. Like IWM, this could be a 1-2 with a 3 coming down. We trade within 1. That 1 is at 33.16, and I'm going to say we have to have extreme caution against longs and be looking for something potentially much more bearish. Okay, we want to get in through a variety of individual names. So we want to look at weekly charts in big tech. I'm going to point out the ones that look the best, the ones that I think you might be even interested in a buy. We still have Apple above all of its weekly support, and into the daily, a possible ABC down right above daily support. Could it go lower? Certainly could. It could work down closer to its lower BB at the 0.382, but everything is there for a potential bottom in Apple. And you can see that ABC. If you looked at Wednesday's chart, this has not moved at all. So if you were playing that from the short side on that doji candle, right as Powell started speaking, that was your invitation to get short. Now we would need to see, just like QQQ, a path coming out like this. Let's look at Amazon, because you're going to see on Amazon, just like on Q's, it closed below its lower BB, right above the rising 200-day SMA. We want to see price hold that minor 1. And so I think in Amazon, there's just some really good invalidation back to that price. So if you want to record it or just follow it on your own charts. So that daily price, where was that? There we go. Right there at that minor 1 high, 128.99. So as long as we don't gap down right away on Amazon, and you're going to see that daily Bollinger Band close too, there is reason to get long against that high of 128.99. Now, obviously, we gap down and all bets are off there, and we could be looking at something much more bearish as I've suggested in Qs. Let's keep going through Goog. So we've got Goog. This is one of the worst ones. Goog and Microsoft do not look good. There's your weekly below all support. So it's not like we're getting confluence long across the board. And this is forced into kind of a choppy 1-2. That's always a dangerous count. But I want to point out, look how far beneath that lower Bollinger Band. So if we're going to get that snapback rally, I think a name like Goog could snap back really quickly. Do you want to look also at Meta? Because Meta did not set a weekly low on Friday. It has a potential 1-2 nest. And so for a name like Meta, this actually has one of the more intriguing short-term setups as long as we don't gap down below Tuesday's weekly low. This actually occurred right at the open on Wednesday. There is good reward against your risk to the long side. So I would put Meta near the top of your buy list as long as we don't get a Monday opening gap down. Okay, like Goog, things for Microsoft do not look good. So the only positive that we have is a lower BB close that could provide that bullish spring. But on the weekly, like Goog, it's not a good look. So Microsoft is a name that has to immediately rebound because it's already traded into the price of wave 1. I have moved that, and it still counts cleanly as a 5-wave impulse into a 2. So we really have to see Microsoft make a big recovery because its weight in SPY and QQQ is just so huge. Let's keep going and look at Tesla. Tesla, like Apple, still above all weekly support, possible inverted hammer bottoming candle. And it also did not make a weekly low, just like Facebook. So it's holding a nested 1-2 up. And I would put it and Facebook or Meta in the same category of reward to your risk, as long as we don't gap down below its weekly low set on Monday, I think you've got an opportunity to add long here for what would be, I think, a very surprising and unpopular move up. Okay, that's big tech, but we're not done looking at the names that close below BBs, because look at NVIDIA. So NVIDIA, an earnings reaction that initially gapped down, went up, but then got rejected with the general market below the lower BB. We've got that right shoulder setting up. Don't overlook NVIDIA. It's possible we get that rocket shot right out of there, and in that case, you want to be buying against Friday's low. We can also look at Netflix. There's nothing technical here about Bollinger Bands. I just want to point out that Netflix is still holding a bullish 1, 2, 3, 4, but like the others, keep track of its initial high off the yearly low. If it trades into 207, we certainly don't want to be considering this name. Let's keep going because we want to look at other names, especially in growth. And here's one that is concerning to me. I've been mentioning for a number of days, 69.58 on Square. It traded into it. It could be a 4-to-1 that's allowed in the first initial thrust up. But this is just one of those where I'm kind of like Microsoft. This is a warning sign in the growth sector. So we need to see an immediate recovery. And if it doesn't make that swing high above the summer high, we could unfortunately be seeing growth in that red count like I've shared. How about Shopify? So Shop did set a weekly lower low. It's got a leading diagonal 1, 2, and this just kind of shows you the uncertainty of whether growth with ARK-K will actually follow through. Another important one for that sector is Roku. Roku just barely undercut the weekly low. In fact, it actually did not undercut, like Meta and like Tesla. So it's possible that we've got an expanded flat here at the 0.786. All of these three are above the lower BBs. We still have to be on the lookout that we could actually get more selling in the week to force them below those BBs. Certainly want to take a look at Zoom because we had just that awful earnings reaction on Zoom. We do have a potential double bottom on potential weekly divergence here, day to day, midweek to the sell. We keep the 1, 2 intact until a yearly low is actually broken. And then one that just looks phenomenal, that members at PPT played to 400% plus for call options is Snow. And I think that Snow could be due for a little bit of a pullback. Has it satisfied this internal 4? Just be on the lookout for an ABC. Maybe it just needs to cool off, but it still looks really, really good. And this count has progressed really, really well throughout this week. Okay, so those are the individual stocks I want to take you through. If you're not interested here in commodities and crypto, you can turn away. But I want to talk about energy. So energy only makes up about 4% of the S&P. If it sold off hard, we could still get a massive rally in the main stock indices. And this would actually be a good thing for reducing inflation and maybe even for the Fed to back off on some hawkish rhetoric. It's not a weekly topping candle, but there is a 3-wave pattern into a bearish fib zone and a possible daily topping candle. So with XLE, I am looking to this as potentially a really good short. Maybe we got a breakdown from a bear flag. So if this is a wave 1 down, anything that either gaps down and tests the weekly low and is rejected, I want to take that as a short. There is some support here around 81. If we bounce and then get rejected, that's where I would enter for a bigger move down. So keep energy on your radar. I think possibly setting up for a great short. Okay, what about metals? Been following these all year, and if you've been following me at PPT, we've just been waiting for the opportunity Did we get a weekly inverted hammer candle at a bullish fib? We're just going to have to wait and see. Did we get a weekly higher low on Friday that could set a bullish nest? Like the individual names I suggested in GLD, as long as we don't gap down below Monday's low, there is reward against your risk to the upside in this count. And you're going to see it in some minors. So GDX, we got potentially an inverted hammer. It's a deep retrace, but miners love to do this above the yearly low. And right in here, are we willing to take a chance that we could actually move up strongly on GDX? So look at that move up right through the last hour. You're going to be hard pressed to find something that did that. And sorry that I didn't update this. All of these should slide over here. If we get a back testing attempt, I think this is worth the chance long. And the favorite one that I like in this sector is AG, because it is nested. And this is in silver, obviously, a 1-2-1-2 up, holding the 50-day SMA, this lower channel, possibly right there within that bullish fib zone. I would give this a chance with longer dated calls, as long as we don't get a nasty gap down, which sometimes happens over the weekend in futures in the sector. Okay, we're going to move on and finish here with Bitcoin. And this is moving as we see it. And this is, unfortunately, like I've been saying for a couple weeks in crypto, not a great look. And we would need to see a pretty quick turnaround this weekend from this bear flag breakdown. So we get into here. There is still a chance that we get a bottoming fib. But we're probably going to have to wait to see how stock futures open to see if this is just an ABC down and crypto gets going. Something kind of interesting, though, in other crypto names is we haven't yet seen a full breakdown in XRP. Maybe it can hold up here. And we haven't seen yet a huge breakdown, at least a fresh yearly low in ADA. It's still possibly holding that higher low. So there is still a little bit of clinging hope there in crypto. But just like the stock markets, this is just such a critical point in time. And so all eyes are going to be on monthly candles on Wednesday. And then how do we get September started? And let me just kind of get you back there to that picture that we could use on SPY. We need these zones to hold. We don't want price to trade into the initial highs off June. If they do, we're looking at possibly something much, much worse. But remember those potentially divergent technicals. If we see that springing recovery, it should not be a surprise because the possibility is there in place. So it's going to be really exciting. I think this is about as interested and excited as I've been all summer into where we're going. Let's see where Monday opens. Again, updates from here move into our premium service. So if you want Monday's update, come join us at PPT. It is a bargain basement price, $35 a month for this kind of analysis. It is more than worth it for you. And we've got a fun Discord community as well, where we're all always learning and growing and having fun. Wish you a great weekend, and do a little study and get yourself prepped for what I think is going to be a really exciting finish to August and into quarter end. And catch up with you later here at PPT.